Microsoft's stock price fell more than 30% recently. So today, we will discuss 6 points with special focus on the company's valuation. First, let's take a look at Microsoft's multiple downgrade. Current PE multiple of S&P 500 is around 30 times earnings. And in just 4 or 5 months ago, Microsoft was trading at 35 times, which is a decent premium above the market. However, as 2026 started, the stock price fell dramatically, and now it's being traded at 22 to 23 times, which is meaningful discount compared to the market. In contrast, Apple's stock price is still trading at 33 times. And so let's first see what caused this dramatic fall. And the answer is what you might have heard of as the SaaS-Calypse, which says that software is dead because AI coding is so good and it will replace all the softwares. This has direct impact on Microsoft, and it's evident from its revenue composition. Microsoft has 3 business segments. The first and the largest is productivity and business process, which is basically SaaS software business. It includes Microsoft 365, Teams, and Dynamics, which are used heavily by various companies. Second segment is cloud business, and the third is other smaller businesses including Windows, Game, Search, and Surface. And if you look at the last 12-month revenue composition, the largest came from the software, which contributed 40%. But this reliance on software is even more evident if we move on to the operating profit. Here we can see the software generated more than 50% of profit. So in this context, we can understand that if this SaaS-Calypse actually happens, more than 50% of Microsoft profit is in danger. So let's break this down into 2 scenarios. First is the fear of the market actually becomes true. And here, obviously, software will be very negatively impacted, if not disappear completely. However, as a counterbalance, this implies that LLM model is becoming extremely good very fast. And so the companies that make LLM and run those models on cloud can benefit very significantly. Second scenario, we can assume that even if AI becomes good, that does not mean that software is dead completely. In fact, if software companies can make their programs better at a cheaper cost, and if AI uses those software as tool rather than replacing them, then the software usage can actually increase, which can benefit software business. And in this scenario, although the benefit will be smaller, the AI-related businesses, such as LLM models and cloud business, will also do fine. So if we apply this second no-shock scenario to Microsoft, its software business will do very well, and its cloud business will also continue its steady growth path going into the future. However, if the SaaS-Calypse scenario actually happens, then the software business will decrease significantly, while the cloud business will do extremely well because Microsoft is just one of the 3 hyperscaler cloud companies. So I ran this scenario into my DCF model, and this is the historical number, and going into the future, I assume that SaaS-Calypse happens and the software business decrease while cloud business does very well going into the future. So this actual LTM composition of profit in just 6 years will look like this, where software now only generates about 4%, and almost 90% of the profit comes from the cloud business. However, it doesn't end here. There's actually the 4th segment that we should consider regarding Microsoft's overall business, which is its early investments into OpenAI and Anthropic. And as we saw before in the SaaS-Calypse case, these companies will do extremely well, which will counterbalance the demise of software business. So here I laid out how the 4 segments will be affected depending on the 2 scenarios that pans out into the future. And as we can see, if the SaaS-Calypse happens, there's actually more dynamic impact on Microsoft businesses. But if there is no shock, then the company will continue on its steady and profitable growth going into the future. So now we need to convert these scenarios into DCF valuation. And in my model of Microsoft, I break down the company into 24 variables, which span from the revenue, profit, capex, as well as the 2 investments that we saw before. And in the bull case, I make all these 24 variables generating positive result. This is obviously not very realistic, but as the name suggests, here I'm just trying to see how much we can expect from Microsoft if everything turns out well. And it shows that the per share value of Microsoft will be $724, which is about 100% upside from current market price. We can show this into the graph here. So this is the highest price that we can expect in the short to medium term. And next, instead of all bull case, I apply the SaaS-Calypse scenario into those 24 variables of Microsoft model. And as we can see here, some parts are doing well, especially the cloud, while the software business has the worst scenario going into the future. And here, the per share value of Microsoft comes out to be $352, which is not so far from current price. And also this was near the floor price of Microsoft traded in recent months. And each one of us will have different view of the possibility of this SaaS-Calypse scenario. But here, for now, let's just assume that I see 80% case that this will pan out. But there are also other 4 cases, such as bull, base, bear, and DSH, which is my own scenario. They can also pan out into the future, so I applied 5% chances for each of those. So if we apply the value of those cases and the probability, and then add these numbers up, we can get the weighted average value of Microsoft going into the future. If you're interested in unlocking all these detailed numbers, please check out the link below for the research subscription service. But for now, let's move on to the 5th point, which is comparing Microsoft to the pure play software companies. Here I brought the CRM market share as an example. Here Salesforce is a clear number 1 player, and Microsoft, SAP, Oracle, and Adobe are competing for the 2nd position. And unlike Microsoft, which has both software and cloud businesses, Salesforce is a pure play software company. And if you check out the recent 6 months stock price movement, we can see that Microsoft actually fell more than Salesforce. This is very ironical because even though the CRM market increased very fast in recent years, if we assume the SaaS-Calypse scenario, this market will plummet very quickly in just few years. And in Microsoft's case, even though the software suffered, its cloud business will counterbalance the loss. However, for Salesforce, it doesn't have the cloud business, so its software business will suffer, then the impact will be larger. However, the stock price suggests the market is seeing about the same risk between these 2 companies. And it's not just between Microsoft and Salesforce. If we expand the comparison to overall software sector, Microsoft and the software sector actually decreased about the same in recent few months. So in the middle of this market panic based on fear, it seems like there are some pockets of opportunities that we can utilize and look at the big picture of the AI value chain and discover values. And for myself, I'm seeing opportunities in some Mag 7 companies that are lagging, and also among SaaS companies, which have decreased very significantly. But also there are opportunities in tech companies in Asia, because Asia is considered to have the largest negative impact from the war in Iran. So the tech companies in this region are suffering from the double negatives. Moving on to the last 6th point, the current situation of Microsoft is similar to Google in early 2025. So just 1 year ago, Google was actually the worst performer of Mag 7. And the key reason was that there was fear search is dead due to AI, which is very similar to the fear that software is dead because of AI. However, similar to Microsoft, which is one of the top 3 cloud players, Google is also one of them. So this is a counterbalance that we can rely on. But on top of that, as Microsoft has other AI opportunities and platform, Google also had full-stack AI ecosystem as well as deeply embedded consumer apps, spanning from YouTube, Gmail, Calendar, etc. So from this, we can learn that if market is so focused on risk of certain technological factor, and if that company seems to be falling behind even just a little bit, it can be hit very hard despite the company being very good quality. And Google came out of discount factor as its Gemini 3 model performed well, and LLM's focus moved from having Q&A session with users to actually coding. So the fear of the market moved from Google to software sector, where Microsoft is positioned at. And as this fear disappeared, Google's stock price increased over 100% in less than 1 year. And this is very interesting because the future of search is still very uncertain. I'm not trying to say that Microsoft will increase over 100% in just 1 year. What I'm trying to say is that we should convert the fear factor into the numbers. And if we can get the probability weighted value of company, then we can make more scientific decision, especially if Mr. Market is strong held by fear. So these are the 6 key points that we saw today. And especially important was how the SaaS-Calypse will impact Microsoft, not only negatively, but also positively through its cloud business, as well as its investment into OpenAI and Anthropic. These investments currently account for about 7% of Microsoft's value. However, if SaaS-Calypse actually happens and AI models become so powerful, it's easy to see how these values can go up 2 to 3 times in just few years. And if you reflect these cases, then we saw that the DCF range of Microsoft going forward. But as always, this is not investment advice, so please make your own independent decision. And if you want to check out my research service, please see the link below the video. And if there are other tech names that you want to see me analyze, please leave a comment below this video. Thanks guys.